when does it become a problem then? Because you're saying they can just change to liquidation, then do things just operate smoothly? Or when could there be that break in the system?
Well, in the scenario I gave where, too many longs, futures longs, put in notice of delivery, the COMEX says, sorry, too many, we're not supposed to supply, trade for liquidation, all that. Okay, so that puts out that fire. But if that was a real demand, then where are those buyers going to go? They're going to go to the physical market, and then that, basically the London Metals Exchange and the London Ring. And that's where things could get very hairy very quickly. I've been talking a lot about this because Trump and Elon Musk are going to Fort Knox to prove that
Yes.
the gold is there.
Well,
Sorry, go ahead.
no, no, no. Please.
Yeah.
I have
Well, I
something
was
to
going to
ask you
say,
about
I
that,
mean,
but
the gold is there. I mean, people know that only about slightly less than half the gold, the U.S. gold, is in Fort Knox. The other half is at West Point in a vault in a secret location. I can't say where it is, but I know where it is. And then there's a little bit at the
you've
Denver
seen
Mint.
it.
I know where it is, but it's
Okay.
classified, so I can't I can't say more. But people know it's there, but they don't know where it is. But it's there. It's an army base. So half is at West Point, half is at Fort Knox approximately, and there's a sliver at the Denver Mint for minting making gold coins basically. But that's it. So it's not all at Fort Knox, but they're going to go to Fort Knox, and they're not going to do an audit. I mean, to do an audit, you'd have these. You know what a gold bar, 400-ounce gold bar looks like. They all have serial numbers, assay stamps, refinery stamps, purity stamps, etc. You'd have to sit there with a ledger and take each number and compare it to the ledger, make sure they're all there, and adjust for the purity. Some of these bars, by the way, have been lying around since the 1920s. They're not 4.9s. They could be 97% gold. No, I'm not saying they're fake. I'm saying they could be 97, 98% gold. They're nowhere near 4.9s. 400 ounces, maybe. Some of them are a little gnarly. I'm not saying it's not there, and I'm not saying it's not real gold. It is. But if you're actually trying to price it out, you have to adjust for purity, weight, basically the things I mentioned. So all they're going to do, it's going to be a photo op. So,
Yeah.
by the way, if you've ever held one of those bars, it's like freeways. They weigh about 25, 30 pounds. But they're going to hold the bars up, see it's here, show you some pictures, and go away. That's not an audit, but it is like the mother of all photo ops. But I think it's a good thing. I think the American people have been lied to so much by the government on so many issues, from COVID to climate change, that they don't really think, a lot of people don't think the gold is there. Well, obviously it's there. Do you think that the Secretary of the Treasury would let the president go to Fort Knox if the gold wasn't there? So of course it's there. But here's the bigger question, the much more important question, and it gets back to what you were talking about, Danielle, with these deliveries from London. Is that gold leased? And that's a very big deal because people don't understand, very few people understand gold leasing and how it actually works. They assume that if JP Morgan or Morgan Stanley or Citibank lease gold from Fort Knox, that somehow they back up a truck and take the gold away. No, that's not what happens. It's a paper transaction. I can lease it to you. We have a leasing contract. You pay me, the equivalent of rent, maybe 1%, 1.5%. It's a way for the Treasury to make a little money. The gold stays right where it is in Fort Knox. But in my example, JP Morgan would now have, as lessee, would now have title to that gold, and more importantly, a right of rehypothecation. That's a fancy word, but it basically means they can lease it to somebody else. And then that person can lease it to somebody else, and so forth. So what you end up with, Daniela, is you have a chain of leases, or what are called sales of unallocated gold. So what's that? So I call up JP Morgan and say, I want to buy, 1 ton of gold. That's a lot of gold, but whatever, say 1 ton of gold. And they sell it to me unallocated. Now what that means is that there's no actual gold in the contract. In other words, it's not like I have bar numbers. I own it on paper, but there's no physical gold behind the contract. It's just, I basically have price exposure, and I can say I own it, but there's no physical gold behind it. So my point being, if JP Morgan leases the gold from the U.S. Treasury, which is entirely plausible, and then leases it to other parties or sells it on an unallocated basis, you very quickly get to a point, I think we're way past this point, where you could have 100 tons of paper gold transactions supported by one physical ton that got leased from the Treasury to JP Morgan. Now, we're not talking about the futures markets. The futures market is a whole other thing, but we're talking about unallocated and leasing and rehypothecation.
Exactly.
So if I were Elon Musk or President Trump, I've spoken to people close to the White House about this. I said, while you're there, why don't you ask the Treasury if this gold is leased? Now, I'm pretty sure they won't ask that question, because if you do, you are tampering with the primal forces. You are getting at something. And you know who Blythe Masters is. Blythe was the head of global commodities trading for JP Morgan for many years. She's now, she's moved on to other things. She's been away from that for a while. But she said something some years ago, and I saw it and I verified it. Then I went back to find it and it was gone, like it was erased from the internet. But she said it. She said, gold never settles. And what she meant by that was all the paper gold transactions in the world will never turn into physical gold. They cannot. It's impossible. There isn't enough gold. And if we even tried, gold would go to $1,000 an ounce so fast, the ticker couldn't even keep up. So, in other words, as long as the longs and the shorts are happy and everyone's got paper gold, everyone's got price exposure, you make money, you lose money, whatever, but you don't try to turn it into physical gold, everything works fine. Gold never settles. You just roll it over and roll it over, or close it out or sell it to somebody else. But if you ever had a real run on the paper market, it would be, you'd break the market in a heartbeat, and gold would, as I say, it would quadruple almost overnight.
Just want to back up. I just want to back up a second, because if we look at inflows into the ETFs in the month of February,
Yep.
we really saw a surge, a significant inflows on gold-backed ETFs, and physical deliveries on the COMEX in February, just completely out of whack there, Jim. So somebody wants gold. Somebody's buying gold.
Right. Yep.
What's your take here?
Retail is a little more active. You're right about that, but they're not really driving the market. In a panic, they will, but it'll be too late. I mean, it'll be, I was saying buy gold at 700, 1,300, 1,900, 2,000. It's now close to 3,000. People just don't do it. It's fine. I'm not in charge of their finances, but people just don't do it. The funny thing is, Danielle, this is just human nature. When it spikes to 4,000 or 5,000, then they'll run out and buy it. They could have had it at 1,300, but they'll wait until it spikes. That's just human nature. The big buyers are the central banks. They're the players. Some institutions, some hedge funds, but mainly the central banks. And we know who they are. It's Russia and China, but also Vietnam is a big buyer. I mentioned their trade surplus earlier. Okay, what are they doing with the money? Well, one of the things they're doing is buying gold. Kazakhstan, Turkey, Iran's buying it. They're non-transparent, but they're buying it. And Mexico and many others. So the central banks are driving. The inflection point was 2010. From 1970 to 2010, central banks were net sellers. But since 2010, they've been net buyers. But the amount of buying has been going up. I mean, Russia has increased their gold reserves by 5 times. And in 2009, they were 600 tons. Today, they're about 3,000 tons. That's a 5 times increase in, it's 16 years, but that's still 500% more gold. By the way, that gold has saved them in the Ukrainian war, because the U.S. put financial sanctions and tried to steal $300 billion of U.S. Treasury securities that Russia paid for with dollars that they made by selling oil. When we froze the U.S. Treasury securities, and now we're in the process of stealing them, they stole $50 billion out of the $300 billion to make a loan to Ukraine that's never going to get repaid. But Russia had put, Elvira Nabiullina, who's the head of the Central Bank of Russia, she had put 25% of their reserves in gold before the war in Ukraine, again, in this period since 2009. Now, here's one of the ironies that shows how much the U.S. doesn't understand about this. The war and the central bank buying and the kinds of things we've been talking about have driven up the price of gold so much that Russia has made $100 billion of profits on a mark-to-market basis on their gold. So, yeah, we froze 300 billion in Treasury securities, but they've been continuing to sell oil and natural gas, and they've made 100 billion on their gold, which thanks to us because we're the ones causing all the problems. So, so they're the driving force. Now they have to be. Russia has been they've shown a lot of finesse in how they do it. They buy 10 tons a month, 20 tons a month. Some months they skip. Recently they haven't reported anything. I don't think that means that they're not buying gold. I think it probably means they're buying the gold through the sovereign wealth fund instead of the central bank, which is what China does. China's been buying gold all along, but we don't really have hard data because they don't buy it through the central bank. They buy it through their sovereign wealth fund with something called SAFE, State Administration of Foreign Exchange. So they have these pockets where they can buy gold without putting it on the central bank balance sheet. But that's what's really driving the price of gold. And if you thought about it, you say, well, gee, why doesn't China just, announce what they're doing and, bid up the price of gold and make a lot of money? Well, the answer is they're not done buying.
Exactly.
See, if you were buying, you wouldn't want the price to go up until you have all you want. When you have enough, that's different. But if you're still a buyer, you want the price to be moderate. So what's going on is a great game involving the major powers, involving gold. There's more to it, but that's what's driving the price higher.